Traders, welcome back to my YouTube channel. Today I'm gonna be doing my analysis for this coming week. Alright, so today is Sunday. I'm looking at EURUSD here on daily time frame. As you can see, I've already annotated my chart because I just want to keep this video short and sweet. I don't want to waste time. Okay, so what I've seen here is that we have taken liquidity below this old daily low, and then price respected this price level right here. Okay, this price level has been respected nicely. Look at these candle bodies respecting this price level so nicely. When we have something like this whereby candle bodies, okay, the close and open of these up and down candles are respecting same price level right there. The close of this one, the open, the close, the open. This simply tells us that indeed smart money has been buying down here, and we are not looking to come back to this level. It's gonna be a very long-term uptrend. This is a nice sign of reversal right here. After grabbing liquidity and price respect a certain price level like this without violating it with a candle body closed or open. Okay, so this is a very nice bullishness sign right here. We have then went up aggressively, leaving this displacement daily fair value gap. Price now is retracing back into this daily fair value gap because these fair value gaps, remember, they are our internal liquidity pools. Okay, here below this low we have external liquidity pool. This is internal, it is inside the dealing range. This is interbank dealing range. What is a dealing range? Dealing range or interbank dealing range is actually a move to the upside that has taken liquidity. After taking liquidity, we then move to the upside, leaving behind the imbalances. Okay, fair value gaps. That is your interbank dealing range. We are dealing inside this low and high. We are in between here. This is a dealing range. Any discount area here, liquidity pool at discounted areas, okay, is gonna give us nice opportunity to buy. So I'm looking for price to trade lower on Monday. Tuesday I will then look for opportunities to buy. All right, my next draw on liquidity from here is gonna be this one. DOL stands for draw on liquidity. After this one we've got this one. Forget about this bearish order block, we already traded into it. It is the cause of this retracement. When we come back above, we expect price to break through the order block and target the daily the draw on liquidity above external liquidity pool. Okay, after that we've got this one and that one over there, the last one, which is the long-term draw on liquidity. So simple and straightforward. We are targeting internal range liquidity pool to then target external range liquidity pool. Okay, draw on liquidity right here. So for the next week, as long as we are showing signs of respecting this daily fair value gap, I look for longs. I want to see price going up, ideally 1 hour time frame. That's where I want to see signs of bullishness. When I get a setup on 1 hour time frame, a shift in market structure on 1 hour time frame and fair value gap, that's when I will look to buy, because this is a daily fair value gap. If this was weekly fair value gap, I was then going to wait for 4 hour time frame to give me that fair value gap here, and then I would buy after that. So 1 hour time frame, H4 time frame, are my actually intraday higher time frames. As a day trader, those are my intraday higher time frames, hourly time frame and 4-hour time frame. So when I have fair value cap on daily, I want to see my intraday higher time frame switching bullish, because right now we are bearish on my intraday higher time frame. With this move, we've got nice order flow coming down here. So I want to see my intraday high time frame switching bullish, giving me that shift in market structure and imbalances. After reaching this area, I will then look to buy. I don't just buy here without confirmation. So this is a very nice clear price action. Just like that, we have our buyers already. Okay, so this was a very nice respected price level right here. So this candle close is actually at 1.15654. The open of this one is at 1.15651. So just ignore the last digit of these numbers that I'm actually reading. Just ignore the last digit, because the last digit is just a pipette. We consider the first 4 numbers after the comma. Okay, so 15, the close of this one is 1565, 1.1565. The open of this one 1565. Okay, 1.1565, respecting this guy. This one here, you see the close 1565. You can see this one here, the open 1565. Okay, 1.1565, respecting this price level. And it's a very nice it's a very strong price level, because it ends with a 5, 16, 6, 5. Okay, it's actually an institutional number. Okay, that's why it's been respected like this. I'm bullish. Let's look at GU. GU has already traded into daily fair value gap. Okay, so we are having a nice sign that indeed this strong push on daily time frame here on this Euro USD is actually a fake sell. Look at this strong push, very strong bearish candle approaching the fair value gap, right? Whilst this one already traded into fair value gap and rejected nicely. Okay, leaving a long wick below. This is a sign that we are actually still buying. We are going up aggressively. Okay, we are actually still buying. This should not scare you. We already have some sort of smart money tool in place right now, because this one has not yet reached the fair value gap, whilst this one has reached the fair value gap and rejected. So this is a strong sign of that smart money are actually still buying. Okay, so Monday next week I will be watching it and see how Monday trades. If we get shift in market structure on H1 time frame, then I buy. Okay, once H1 time frame give me that shift in market structure and imbalances after reaching this area, I can then switch to smaller time frames to take my intraday trades. 5-minute time frame, 15-minute time frame. Simple and straightforward. It's a buy. This one can still come back into this fair value gap, even if it's already traded into it. Fair value gaps, we can trade into them several times, but as long as we are still respecting 50% of this fair value gap, okay, the consequence encroachment 50% of the fair value gap, if we are still respecting it with candle bodies never closing below it, we are still bullish. All right, that is the golden rule right there. okay, but if we come and close below 50%, there are high chances that we are going to close below it and then target this low. So as long as candle bodies are respecting 50% of this fair value gap, we are still bullish, strongly bullish. Thank you so much. If you watched up to this far, I hope you find this video very insightful. Like the video, share and subscribe, and also hit the notifications bell button so that you get notified whenever I upload these videos. Stay tuned. Please share the video so that you help us, like the video so that you help us push this channel to more traders so that we grow as a strong team of smart money trading traders. Thank you so much. See you on the next one.